The crypto market saw liquidations of $657 million in the past 24 hours, as Bitcoin, Ethereum, and XRP prices dropped by 3.89%, 4.2%, and 6.49%, respectively. Bitcoin's rejection at a key technical level exacerbated the sell-off. Due to XRP's high correlation with BTC, it faced a similar drop today. As a result of today's crash, the XRP open interest has dropped $140 million in the past 17 hours, according to Velo data. This flush in OI indicates that over-leveraged positions were culled from the market, creating a favorable buying opportunity. A 7% drop in the past 12 hours caused $23 million in XRP long liquidations. This sudden nosedive ended the 18-day range tightening that XRP underwent, creating lower highs and lower lows. Connecting the trend lines with swing points reveals a falling wedge pattern. Generally, falling wedges offer a bullish breakout opportunity, but the recent crash has done the opposite due to Bitcoin's crash. Regardless, the nosedive in crypto markets has caused XRP price to revisit a key support level at $2.139. Considering that this support is the highest traded volume level on May 4th, which led to an 18% rally, a retest of this level is likely to provide a stable support level. Absorption of selling pressure in this area could lead to a bottom formation here. From a technical standpoint, the chances are in favor of bulls. However, Bitcoin's outlook remains bearish as noted by CoinGape's previous coverage. Hence, investors should watch for a BTC recovery rally to confirm a potential bottom formation for XRP. A failure to hold above $105,000 could lead to a steep correction for BTC, including a revisit of $100,000. In such a case, the high correlation with BTC will cause XRP price to follow Bitcoin's footsteps and crash lower. Investors can expect a retest of the $2 psychological level under these bearish conditions. The macroeconomic factors keep playing a crucial impact on crypto market. One key such factor is Trump tariffs and U.S. President's uncertain moves. Yesterday, the market went bullish following the U.S. International Trade Affairs Court overrules the tariffs. But, as reported by CoinGape, soon after, the Federal Appeals Court reinstated the Trump tariffs. This was a huge shock for the crypto markets. Bitcoin fell to $105,000 while XRP price also took a hit. Markets are expecting a very volatile weekend as macroeconomic factors continue to adversely impact crypto, while the fundamentals look better than ever. What is XRP? Founded in 2012, XRP is a digital asset created to drive innovation across the financial payments space. It is the native token on the XRP ledger, XRPL, a distributed, open-source, permissionless blockchain maintained by a network of peer-to-peer servers, known as unique nodes. XRP functions as a mechanism of exchange between two different currencies or networks and can be sent directly without the need for an intermediary. Think of it as being able to send cash directly to someone overseas without the need for a bank or payment processor to handle the transaction. The peer-to-peer nature of XRP makes it a convenient tool for bridging two currencies in a matter of seconds, not days. This saves time and money and simplifies the process of international transactions. Banks in various countries have also adopted XRP for routine hawala transfers. How has XRP performed in recent years? In the 2017 bull market, XRP reached an all-time high of $3.40. Since that time, several challenges, including wider market corrections and the Securities and Exchange Commission's SEC case brought against XRP, saw its price hit lows of around 15 cents in mid-2020 and 38 cents in July 2024. The months following the July 2024 low have seen XRP gain almost 600%. These gains are due to positive sentiment following President Donald Trump's re-election in November 2024, questions over the validity of the SEC's claims in its case against Ripple, more on that below, growing usage of the network, and hopes of XRP exchange-traded funds, ETF, being approved to begin trading in 2025. The recent developments signal that XRP could be entering an exciting new stage of growth, as usage and the promise of regulatory certainty combine to drive upward momentum. On January 15, 2025, XRP hit a 7-year high of $3.40, driven by a surge in meme coin trading volume on the network, anticipation over President Trump's crypto-friendly administration, and the potential for clarity over the SEC's case against Ripple as the leadership transition takes place at the SEC. Are Ripple and XRP the same? When talking about XRP, one might often hear it used interchangeably with Ripple. However, the two are quite different. Ripple is a company that provides a blockchain-based digital payment network for its users. XRP is the crypto asset that facilitates payments on this network. XRPL is the software ledger where transactions with XRP are recorded. The company has undergone multiple rebrandings over time to reflect changes in ownership or direction of the project. In 2023, Ripple acquired crypto businesses Medico and then Fortress Trust to support our existing lines of business, specifically in terms of improving the customer experience. Continuing the takeover strategy in 2024, Ripple bought out Standard Custody, a custody provider designed to service institutions. Throughout the business's evolution, one thing that has remained consistent is the ticker symbol XRP for its native cryptocurrency. How does XRP and the XRP ledger work? The XRP ledger. The XRPL consensus model is built upon a core principle. A little trust goes a long way. Unlike Bitcoin's proof of work or Ethereum's proof of stake protocols, the XRP ledger doesn't use mining or staking to validate transactions. Rather, it allows trusted, permissioned servers to create consensus on the network. These servers, or unique nodes, maintain a unique node list, a list of nodes that the network deems trustworthy. If 80% of nodes deem a transaction to be valid, a unique node can then proceed with validating that transaction. In the past, the XRPL has experienced out-of-sync issues, leading to downtime across the network. When one node on this list is compromised, the effects can spill over to other nodes, further slowing down the network. However, reliability has improved in recent times. XRP, the native token, the total supply of XRP 100 billion, was created and distributed to individuals and companies at the launch of XRPL. Unlike other consensus mechanisms, nodes do not earn rewards for maintaining the correct version of the ledger. There are some customers on Ripple's digital payment network, RippleNet, that prefer to send funds without a pre-funded account. Ripple makes this possible through their on-demand liquidity service. In this service, XRP, along with a pool of other digital assets, e.g. Bitcoin, Ether, Ethereum Classic, Bitcoin Cash, and Litecoin, is used to provide liquidity for these transactions. When parties have different preferred methods of sending or receiving money or use different currencies, RippleNet acts as an intermediary for their transaction. As both parties are using different currencies to transact, no physical money moves during the process. Rather, the transaction is conducted in XRP, which equals the value of the money being sent. The network also charges a small fee in XRP to complete the transaction, but it's minuscule when compared to other traditional international payment networks, such as SWIFT,